Hey everyone, Scott Smith with the Smith team at Keller Williams. Happy Friday. Wanted to share with you as we're kind of getting into April, talking a little bit more about finances. And one of the hot topics right now is how the luxury home market will change with the current market conditions. So, obviously, every real estate market is always dynamic. We're seeing changes every day, supply and demand, interest rates, buying power, all that kind of stuff. So, I thought I'd just share with you a couple quick points and some takeaways, and a great link to the Luxury Home Institute for Luxury Home Marketing. Great report that they've got some fantastic information. If you want to take a look at that, we've got the link attached to that. So first thing, what price point in the Twin Cities is a luxury home? What would be classified as a luxury home? And across the country, typically agents will look at that as the top 10% of the market. So 1 out of 10 homes will fall into that luxury home, upper bracket type of property in that price range. So certainly to each his own how they want to define that, but I'll just use that for the Twin Cities market, because typically that would be something that would be north of 750,000. But as we're seeing a larger gain in the median sale prices, that luxury upper bracket property price point is certainly going upward from there. The last year or two, we've seen more sales over $1 million than we ever have before, and that's certainly fueled by the affordability, and also people are also looking at with remote work opportunities. We're seeing more and more people that are maybe moving back from different parts of the country that are more expensive. If you look at people moving out of California, where a starter home is $750,000, and moving back to the Twin Cities area, where they can get a very nice home, great schools, and they can work from home. It's certainly a different type of product with that. So a couple things that have driven the luxury prices. Obviously, affordability is a big thing, and that's probably the biggest thing that's changing right now with the interest rates certainly creeping up. The last couple of years we've been had the luxury of having interest rates right around 3%, and in the last few weeks we've actually seen them get close to that 5% price, or 5% point, and that definitely has an impact on what is going on with the market conditions right now. We're going to expect things to stabilize. We're not going to see a free fall. We're not going to have that artificial inflation that we had many years ago with a lot of the mortgage fraud. We're definitely going to see things stabilize. The other thing that will have an impact, or has had an impact, is the massive amount of equity that homeowners have had. So if people have been sitting on really good equity, they've been sitting on a good mortgage, and they're maybe sitting on the sidelines for a while, they've seen that equity in their home grow, and they said, you know what, now's a good time for us to make a move. Let's buy that house now versus waiting a couple years and take advantage of the equity and awesome interest rates. So moving forward, looking ahead, what are we going to see? We might see more attractive rates in the jumbo market. And jumbo interest rates in the Twin Cities metro area is set by Fannie Mae and Freddie Mac, mortgage bankers. And I believe that mortgage amount right now is about $575,000. So if you're sitting on that, looking at a mortgage around that rate, typically those rates are a little bit less than the traditional, conventional, conforming, what we call it, interest rates, because lenders feel it's a better risk. People still have skin in the game, and it's a higher income, higher net worth individual that's borrowing in. So they want to try and attract those clients. So they try and make the interest rates a little bit more attractive to them. We've also seen a huge run up in vacation properties, and also lakeshore, or something that's maybe a little bit more unique, where you might be looking at acreage properties or new construction. So really those kind of three market segments, lakeshore, acreage, and new construction in that upper bracket luxury price point, certainly more attractive. Those buyers are definitely more selective. Obviously, if they're going to be spending that kind of money, they want to make sure that they're getting what they want. And if they do see the opportunity, they're going to take full advantage of it. So definitely a lot of competition in that price range, stronger than we've ever seen before. We've heard stories of properties going for $100,000, sometimes $200,000 above list price in that upper bracket. So it's still a crazy market out there, just more decimal points, I guess you could say. So with that, take a look at that Luxury Home Institute for Luxury Home Marketing report that we've attached to the email. If you have any questions about how we can help you work in that price range, what that looks like, certainly price is a big factor in understanding what this market is doing. Supply and demand trends, we really dive into it that much more. And it's also an art and a science when we're marketing those luxury properties. So we're happy to help you or anyone you know that might fall into that category and help get the job done. Thanks. Have a great day. Take care. Bye.